Okay. Hi, everyone. I think we are live with the new episode of SaaS Lounge. And today we wanted to discuss a new topic related to mobility. And today with me, I have representative of three of our portfolio companies, Charis from Spotawheel, Dmitri from Pullet, and Mike from Whizz. So maybe without further ado, we're actually going to start. The idea today is to talk about mobility as a topic, but more specifically touch upon, I guess, subtopics such as what's changing in mobility, what are the current trends, and what's changing, what's shaping the landscape of mobility. Talk a bit about how companies in this space are leveraging technology to grow, to expand, to differentiate. We'll talk a little bit about capital structure and how companies in this space look to fund their growth. And at the end, which might be one of the more interesting parts of this conversation as well, is to talk about kind of get our crystal balls out and talk a little bit about the future of this sector. But maybe to start with, I'll let the panelists introduce themselves. And in no particular order, Charis, maybe we'll start with you.
Sure, thanks. Thanks, Ilja, and great to be here. Thanks for the invitation. I'm Charis. I'm founder and CEO of Spotawheel. Spotawheel is a company operating in the used cars space. And what we are doing, we're super excited about it, is that we are providing used cars at scale to our customers in the region of Central Eastern Europe. So now we are operating live in Greece, Poland, Romania, and we do have plans to expand further in that region. We sell cars, but also a quite exciting thing is that we also provide them on subscription for clients. So the unique thing that Spotawheel does at this point is that we are combining the used car as an asset with the subscription flexibility that the customers can enjoy. So that gives, I would say, a new way towards people enjoying mobility, making it more democratized with lower price points at scale. So great quality cars, great prices on a subscription basis, super flexible in markets where they do have a big gap on the financing side. So things are looking great, growing fast, very, very fast. So super excited about it.
Thanks, Charis. Mike, maybe you next.
Yeah, sure. So yeah, it's nice to be here, guys. I'm Mike, CEO and co-founder at Whizz. Whizz is an electric bike and electric moped subscription service for delivery drivers in the United States. This means that we rent out our electric bikes and electric mopeds to delivery guys who work on delivery platforms like DoorDash, Uber, Grubhub, and others. So these guys, they need transport to deliver, and they kind of rent it from us on a monthly basis. We started this company 2.5 years ago in New York, now operating here in States in 3 states, and next year we are going to expand in much more areas. Have several thousands of electric bikes already, growing fast. So yeah, it all goes well, and yeah, happy to be here.
Thanks a lot, Mike, and great to have you. Dmitri, your turn.
Sure. Hi, everybody. Thanks for having me here on this panel. So I'm Dmitri, CEO at Ports. At Ports, we significantly improve and revolutionize the urban logistics, urban mobility through e-hub-based model. In specifically, we rent our e-bikes and other e-vehicles to food delivery riders, so that's our target audience. And our e-hub model unlocks the most convenient and sustainable offering to the food delivery riders. So we offer flexible subscriptions, daily passes, weekly and monthly subscriptions. Riders have opportunity to minimize their downtime and have ultimate convenience. And it's a very comprehensive package, which includes parking, charging, maintenance. So basically, turnkey solution for delivery riders as the target audience. Right now, we operate in London, and we also have presence in Stockholm, Sweden.
Great. Thanks, guys. Thanks for the introductions. So maybe to start with, as I mentioned, it'd be great to talk a little bit about how the mobility sector evolved, particularly over the last couple of years. Obviously, there have been subscription models introduced, which kind of moved on from operating leasing. Electric vehicles being introduced, and that's related to both cars and bikes and kick scooters and whatnot, and generally kind of a sharing economy concept has emerged. So there are all these trends that I guess we see from the side and as consumers. But it'd be interesting to see and understand, how do you feel or see this landscape evolving, and what's really changed, and how your companies are positioned to kind of leverage these developments or shape them. Charis, maybe we can start with you.
Yeah, sure. Thanks. So interesting question. Over the last couple of years, many things has happened, especially in the areas that we operate in, but I think also globally. So all that inflation that then leading to the highest interest rate environment did affect all the industries. In particular, it did affect also mobility in our sectors as well, on the cars. There has been a trend even before that around mobility and more flexible ways of using vehicles. I will say that it has been accelerated quite significantly over the last couple of years, especially when it comes to affordability and to what kind of risk or appetite people have in deploying large sums of capital into owning a vehicle in a very certain way for a long period of time forward. So I think that was also a revelation to us that basically the moment we launched the subscription a couple of years ago, on top of our, let's say, core business, which was buy and sell cars, we actually really understood how important this is as an option for clients. And then digging into it a bit more, I think, so looking at it from a, from my perspective and how I see things, I think there is a big gap at these days between the financing options that you have and the needs of customers. So on the one hand, you do have the traditional bank loans that are trying to finance an asset for a long period of time and try to lock you into that asset. On the flip side, as a customer, you do have very, varying needs and changing needs. Your family changes, your affordability profile changes, the environment is not that steady around you, so you need to be flexible to go in and out or downgrade or upgrade. And that's the kind of gap that we see that it's even widening, especially in our regions where financing is not that sophisticated, I would say, coming from the banks. And I guess this is what we are seeing, that with the subscription model, there's a huge opportunity for us to capture it, exactly because we can tailor this whole thing to our customer needs. And at the end of the day, provide much more value to that customer, even though it seems to be a bit more expensive than taking a loan. At the end of the day, if you factor all in, then we want to end up to the point where it's a no doubt better option. So I guess that, we do it, and we're not yet at the stage where we see some early adopters. I think it's a mass adoption of the model, and it happened much faster than we would have expected. Again, the fundamentals are in place. You need great quality cars. You need at scale options for clients to choose what's their mobility, their preferred mobility or vehicle to use. But having the way to provide it to customers in an easy way, in a stress-free way, that now it's more and more important. And you can actually see that as a trend coming from the newer generations also. And somehow, not squeezing, but pressuring also the older generations to actually adapt to it. So we have been quite amazed of that. So that's a trend. I wouldn't call it a trend. I would say that in a couple of years, that will be the that would be the way to go forward
Right.
on that space.
So owning mobility assets is kind of moving in the footsteps of what we've seen with software just years ago, right? Where you moved from buy to essentially kind of rent or subscribe, to always be able to have the best of breed solution and have the flexibility of swapping out. So I guess what you're saying is we're moving kind of to render subscription model and definitely kind of away from buy. Mike and Dmitri, I guess interesting from your perspective, because I guess Charis and Spotawheel, they obviously operate with much harder, I guess, more expensive assets like cars. You guys work with, I guess, smaller assets, bike or scooters. Do you see the same trend? Interesting kind of to see from your perspective.
Yeah, sure. First of all, I totally agree with what Charis and you said about that, owning model is going away a little bit and sharing or subscription model is going up. So that's what we see as one trend. The other trend we see in our industry is that there are way more type of vehicles now than it was like 15 years ago. So 15 years ago, the market was dominated by, let's say, by cars. So it was a primary vehicle to move. Now we see, especially, and it differs in different regions, but let's say in Europe or in Asia, we see way more different type of vehicles, including micromobility vehicles like two-wheelers, three-wheelers, whatever, golf cars, whatever. So it becomes way more flexible and people are choosing a type of vehicle more flexibly, like for different type of, trip, including bikes, scooters, like I said, golf cars, small cars, like different type of vehicles. So this is the second trend when the market comes from cars to, to whole zoo of different vehicles. And the third trend is that it goes from gasoline to electric. So this is an obvious trend. And well, in cars, it's way harder because of the legacy and the infrastructure. But in micromobility vehicles, obviously nobody uses gasoline, bikes or scooters. But nobody actually uses regular bikes or scooters already. So everybody is preferring, electric devices. So in micromobility space, this shift to electric devices already happened. In cars, like I said, it's a way longer period of time. So these three trends.
I would maybe add some interesting context about food delivery specifically, since this is where we operate, and Mike as well, and I think it will be interesting for the audience. So the trends that we see in food delivery is that in the past 5-10 years, let's say the market of food delivery matured on the platform, on the consumer side, and on the merchants. So now there are, let's say, between 2 and 3 apps, major apps in each country or region where consumers can order. However, the rider delivery side is catching up still. So as Mike mentioned, it evolves through transition, like from moving from regular cars and, let's say, pedal bicycles to more sophisticated, efficient and faster solutions, such as e-bikes, mopeds, etc. That are more cost effective and help to maximize earnings or offer more flexibility and convenience to the users. And for example, in Europe, there are over 1 million food delivery riders, and most of these riders work on a flexible seasonal basis, meaning that they don't necessarily want or cannot afford to buy electric bicycle, which can cost somewhere between £1,000 and £2,000. For example, so it's pretty expensive and they cannot afford it. And then the financial institutions cannot or don't want to bank and provide a credit for this kind of purchases, right? So we have a gap in a sense where there is a very large audience that wants access to high quality, fast vehicles, right? But at the same time, there is not so much supply of flexible, affordable solutions. And I think that's why the subscription model and flexible model is and will be expanding quite massively when it comes to like food delivery and other sectors.
Gotcha. Okay. Interesting. I guess that's what we're seeing as consumers as well. But great to get that insight from you, kind of as operators. And then I guess that being kind of a segue into my next question, with these trends kind of shaping up and moving away from like the buy model versus rent that is dominating or continues kind of to increase its share now, switching to electric, etc. You guys as businesses obviously leverage technology, and then technology in parallel, particularly like in the software space, has been evolving massively. And most recently, last couple of years, the evolution of artificial intelligence, I guess IoT just becoming more of a thing in the world. How do you guys leverage technology, and what particular technology, in order to make that, I guess, access to mobility even more convenient to customers and kind of meet their expectations and demands? Dmitri, we can start with you, but Charis, Mike, feel free to chip in with your thoughts as well.
Sure, yeah, very good question. And I think starting maybe with IoT, because it's maybe the heart or like one of the cornerstones for our technology, and it enables us to facilitate a seamless user experience, like starting from initiating the rental, fleet management, like control of the bicycle by the user through the rider app, like to pause and resume the rental. And at the same time, our centralized team manages has an option to supervise the fleet remotely, and then to take actions and to minimize the downtime, for example, through sending mechanics for repair maintenance of the fleet based on various IoT and other data points, and to provide even better user experience. So I think like IoT plays a very significant role in both user experience and operational efficiency. Also, our charging stations are also IoT enabled. So again, it helps to automate and to centralize most of the operation functions and tasks, which is great. And when it comes to AI, I think that's something that I assume all of us are will be incorporating in the next years more and more when it comes to like leveraging this data. And for ports specifically, AI and data analytics helps to improve further the repair maintenance of the fleet, and to have predictive maintenance that in return enhances user experience and helps to predict some anomalies with regards to health of the fleet or particular user behavior.
Yeah, I totally agree with Dmitri. IoT and connectivity in general is a game changer. So, for example, with micromobility devices like electric bike, we could not run our business without this technology. Obviously, imagine if you rent out an expensive electric bike and then you never see it again. So, what do? Now we can directly control it, we can track it, we can see it, and that technology actually makes our business happening. So this is one major technology. I would underline the other one. It's chemistry, it's batteries. So this is another big field of innovation, and it really goes really fast. So like literally every month something happens on the chemistry and battery side. It's all improving, growing, becomes safer, and becomes charges faster, ranges longer, etc. So I'd say that the innovation in battery space is another driver of this, at least in micromobility, in the bike, scooters, etc., is another driver of growth.
Wow, that's actually quite interesting, because I was thinking software, but you're right. I guess particularly when it comes to kind of electric vehicles, a massive driver there is the battery. So I guess developments on the chemistry side is something that's driving you. And Charis, what about you then? Is it kind of more fundamental sciences that drive your business, or is it kind of software and
so feel that what
regular
Mike and
technology?
what Mike and Dmitri said, they're so applicable to us as well. So we do rely on these technologies also across our business. I guess on us, what really differentiates us as a model is that we do. It's imperative for us to be able to estimate and predict the value of our cars forward, especially when they're put on subscriptions. Not only when we buy cars, because we are a used car dealer, so we need to be able to price correctly and able to make margins out of these cars, but also to predict forward the value of that asset, so that to be able to finance it and be on the safe side. So what we have developed since the beginning is that we really invested into building our data gathering model, our analysis, and our pricing models to really be able to source at scale. So we're talking about taking millions of points daily, being able to really do a price arbitrage between cars, between countries, and then come up with the right cars for the right inventory, for the right country that we want to have, and always be on the safe side in terms of margins and all the costs in between. And also at the same time, understanding how all these cars depreciate in every single market, depending on the usage. So all of that for us, it is AI, and it's not the LLM type of AI that we see now, but it has been always machine learning, deep learning on all these assets that we've been doing over the past, I would say, 6 years, and keep developing that. So that's super crucial, because that's the backbone of us being able to properly price and predict. But on top of that, we do run a big business that has a lot of touch points. So we do have a lot of customer-facing touch points, so website, applications. So we need to be super good on that front. We need to be super good on our operations, because we do employ a lot of people doing a lot of heavy operations. So we do have preparation centers of our own. So we need to really be in the position to control all that supply chain. So a lot of focus on that. So the typical type of technology that you'd find on the software side and on the analytics, we have it, and we need to get even better on that one as we move forward. And I would say that with respect to the future and what you see now on the LLM side, obviously we do see that there will be a lot of productivity gains forward for all of our businesses in terms of how you can interact with your customer, how you can run internally some of your operations using AI agents instead of potentially human resources on some of the stuff. I think that's to come. I don't see that happening immediately, but it is something to come, and it is something that we are also getting ready now to be able to be in the position to fully capitalize on it when that technology is mature enough to be deployed at scale within our business.
Gotcha. And I guess ultimately the leverage of kind of that type of technology makes you guys more efficient as a business, but that advantage, right, that operational advantage translates into ultimately the consumers or your end customers' value. And so rather than having to go and, I guess, traditionally lease or buy a car, go through kind of, I don't know, like offline marketplaces, online marketplaces, it's all kind of available at a click of a button from you guys. By being able to price accordingly, position the assets accordingly, you can price the end price for the consumer is better. So you guys, I guess, just extract synergies from all that process and spread it.
Yeah, I would say it's even like let's say double purpose, and if it goes really wrong, like the operational efficiency and execution in all our businesses, then not only users will churn and not come back, but also the business model will fail and will not be operational, right? So that's why data and like operational efficiency is at the heart of all our businesses that we discuss, and it's so critical, especially now when there is no excuse or opportunity to waste investors' money and to make mistake or maybe postpone bringing this efficiency. No, it should be like part of the DNA of the team and the company.
Right, and I guess since we're on the topic kind of technology, and we've touched upon how that helps kind of solve operational challenges that you guys have. It'd be good to talk a little bit about and understand from each of your perspectives, like maybe taking a step back. Usually, kind of during these SaaS lounges, we have many topics kind of related to software as a service, and us particularly as investors, we understand and love software businesses because they're easy to scale. There's not much required in terms of operations, right, to take off the business and scale it globally. You guys are obviously different. You have hard assets, so that naturally and intuitively must be harder. But it'd be great to hear from you kind of firsthand what sort of challenges that you kind of face on kind of, I guess, a day-to-day basis, but also maybe more strategically over kind of mid to long term in order to scale your businesses, both kind of geographically, size-wise. Mike, maybe we can start with you.
Yeah, sure. So just to clarify the question, so the challenge is to grow?
Well, I guess, look, it's not just the challenges to grow. It's interesting to understand generally what makes your operations harder or maybe more interesting or easier in a way than like a traditional software business. And yeah, what are the challenges that presents to scale the company?
I mean, look, it's not a software business at all. So Whizz is a software-enabled business, but not a software business, which means that we still build our own software. We have developers, we have all that stuff, and we build our own product, but we don't sell it as a software, right? We use the software to improve operations. So this is not a software business, this is a software-enabled business, which means our software makes us more efficient. So we still have all these challenges of software companies around building your own software, building team, hiring talent, and all that kind of stuff. But on top of that, we have all these operational challenges of the kind of traditional business when we have thousands and thousands of, in our case, electric bikes, and we need to, maintain them, repair them, etc. So it's kind of, I look at it like we have the software part, and on top of that, we have an operational part, which is very huge. And we kind of have to build it all together because it's very, very connected. So let's say for Whizz, we make around 3,000 repairs of our electric bikes per month. So that means more than 100 repairs per day. And if we want to be efficient, we need a lot of software to do that. Like we want to track everything, like what kind of repairs do we make, like how long does it take, how much does it cost, if we introduce a new feature or a new bike, like how does it influence on the on all these parameters, etc. So that is very important. And of course we never could do this without a software. So basically how we look at it, we go through our P&L, we look at our costs, and we apply one question to any line in the P&L, how we can decrease this cost with our software. Like what can we build on the software side to decrease this, this cost in P&L? Like let's say maintenance, or let's say fraud, stealings, or repairs or something like that. Or maybe, a lot of things like that. So basically software helps us to scale a very kind of traditional offline business. That's how it works, and that's how we look at it.
Interesting. And Dmitri, maybe how do you guys see it? I mean, I imagine you face similar challenges, although your model is slightly different, I guess. So interesting to understand your take on this, and also on the scalability. How do you guys approach it? Because also something that's quite interesting, right? So as I said, with software, you can, you build a product, you've uploaded it to the cloud. Let's call it this way, right? You've launched a marketing campaign, right? And any user, wherever they're based, as long as they have access to the internet, a computer, they can download and use it. How do you guys see it? Other than the obvious that the bikes need to be where the user is, but how do you kind of approach getting your product distributed across the market, if you will?
Yeah. Well, first, maybe before I go into like the consumer side, I would like to maybe mention the hardware side, because that's a very, let's say, complicated element in the business model that most of the like pure software companies don't have, right? And with regards to hardware, there are several particular issues to solve, starting with supply chain, right? Because the lead time for our bikes, for example, is somewhere between like 4 to 6 months, right? To press a button to order bikes and to have them deployed in London or in Europe, let's say, right? So that's something to factor in, because unlike software, it requires more advanced and far ahead planning. Also, another element is financing the hardware and capex in general. I guess we're gonna talk about this in the next like minutes. So maybe not going into
Yes, we
details too
will.
much, but it's definitely like something unique for our business model, and it's half art, half science to crack it and to succeed. And when it comes to like the expansion and identifying the geographies, for us, it's basically a factor where demand is. So where do we need to launch e-hubs in the most convenient locations for our delivery riders? And often it's intersection between high demand areas where restaurants or merchants are, and the logistics hubs. Like the riders don't live in city center; they commute to the city center from like residential areas. So they want to have our port hubs strategically located around logistics hubs and very close to the restaurants, right? So we do a lot of consumer research, data analytics, and we work closely with our infrastructure partners to identify and build up this pipeline of locations to launch, which also takes time, obviously, because it's essentially infrastructure rollout. So again, something very unique compared to the pure software businesses.
Yeah. I think it's for sure, as the guy said, I think it's way harder, and you need to factor in different complexities when you have to do with an asset-heavy business. In our case, I guess it's a matter of, as Dmitri said, it's the supply chain, right? Supply chain means not only what you do, but it's also what your partners do. So when you rely or you need to be within an ecosystem that needs to work with you to be able to scale, then that's a complexity by its own. So you need to understand and you need to plan it in a manner that they will grow with you and follow your lead, right? Especially when you're opening up new countries, then you need to redo the whole thing again and again and again and find the local partners, be it banks, be it some workshops or some parts providers, or that could be insurance companies. So whatever matters in the business, you need to find the proper partners that can help you kick off and continue to grow. That's the one thing that it is a complexity when you're growing and expanding. And the other thing that it is a complex is also the growth rate. So we take it for granted that SaaS businesses can triple every year, right? And that's exactly what we are also after. So we want to be able to actually triple every year. So tripling every year in a SaaS business is completely different than tripling in an asset-heavy business, because it's not the most like the easiest thing in the world to take a factory and triple it in a year and then do that again the next year, right? That involves people, infrastructure, machinery, processes, and that's exactly what we are going, what we are facing. And you have to go back a bit and rethink and take nothing for granted. What would it take for me to be 10 times bigger? What do I need to fix now? Because in a year from now, that will become a huge problem in terms of scaling up. So much like what, I don't know, Musk is doing with Tesla and how he had to rethink the whole thing on the factory side to be able to deliver to the consumer side, it's not that much different what we need to do when we need to plan ahead the growth And as the guy said, you need to be fixing a lot of bikes, right? Or a lot of scooters or a lot of cars, and then triple that next year. That means people, partners, workshops, infrastructure. So you need to be planning all of these things also at the same time, while also thinking about the customers and the marketing cost and the actual product. Do I have it or not at scale? So that's the kind of complexity. But however, that's exactly also the barrier to entry, right? So if you solve that, that's exactly why the others haven't solved that.
Yeah, I think another
Yeah.
upside of this is, or the benefit of this complexity on the operations or like supply side, is that once we figure it out and deliver well, then it will be easier to acquire and retain users.
Yep.
So that's like a very strong synergy, if we can say, between these two. But again, like to figure out the operational execution and scalability of the business, that requires a lot of effort.
Indeed, a hell of a job. Interesting to know kind of how you guys approach it as well. But I'm conscious we could spend like a lot more on this topic. It's actually quite interesting because it's different. But in the interest of time, one of the other topics wanted to talk to you guys about today, and as I guess Dmitri predicted, my next question was kind of to talk a little bit about the capital structure of your businesses. Then, and look, I guess it's no secret to anyone if you're running a hardware business, there will be a debt component, and it can take various shapes and forms and sizes. So, Charis, maybe a question to you, particularly like within kind of between debt and equity, in the mix of your capital structure, how does it look? Just give us a flavor.
I would say that now, debt is double what we've raised on equity so far, and we expect that to be growing much faster than equity going forward because we are hitting profitability. However, we do need the debt to keep growing. So the debt for us is the engine, right? That the more we scale that debt, the more cars we can put on our balance sheet, meaning the more subscriptions and fleet, and that's how to increase it. And that's a complexity of itself. So when you're doing fundraising as a founder in such a business, then you need to be fundraising on both ends at the same time, right? So you need to be having an equity story, but at the same time, there needs to be a debt story in place. And the audience is quite different on what they want to hear on that one. And you also need to be solving for different things, right? Solving on the growth on the one side, but on the other side, you need to be solving for security on that debt. So for us, it's super crucial to be able to get asset-backed lending, as we call it. So it's basically having the cars as collateral to our debtors. And it's very significant for us to separate that from the rest of the company to make it fundable at scale across countries by the largest banks now in the world. So it's a different kind of thing that you need to start thinking early, because unless you have it on time, then you will not be able to fund your way through it and continue to grow. The good thing is that the more you do it at scale and the more you grow, the easier it becomes, because there is a history that you've proven that it works and you know how to price and the assets are good, so more debt is coming at better rates. However, it is something that everybody needs to think through properly and find the best way, because it's going to be critical for these kind of businesses. That's our view.
All right, and the question to all of you guys, I guess, how available is capital generally for kind of more asset-heavy businesses? Obviously, there's been a massive wave of investments into software businesses, again, for the reasons we discussed, easy to scale, capital efficient, et cetera. You guys are essentially, taking kind of the older asset heavier industries to, I guess, a new iteration, right? Enabling them with technology, but still it's, as said, potentially more, or businesses that are harder to scale. So how do investors view it? Do you guys see capital is harder to attract? Is it kind of more available to you guys because of the barriers to entry?
Yeah. Well, I can relate to micromobility industry mostly. So I'd say that in the last couple of years, the industry was kind of in some kind of a crisis, let's say, because before that there were this gigantic investments in Lime and Birds and all this kind of scooter sharing companies, and then a couple of them just crashed, and it kind of affected the market. But what we see now is that companies that stayed alive, they are still growing and they're becoming profitable. So the market is maturing, and it seems like it's kind of getting the second life. So now the model is proven, it kind of works. So people figured it out how it should work. It's took a lot of investors' money to do that, but now it's done. And now we kind of see the second breath of growth in this market. And but still, in our case, to raise, and I totally agree with Charis, by the way, that in this business, you have to build two different stories. The one is for equity investors when you build a, fast-growing unicorn. The other one, high risk, high reward, The other one is for debt providers where there is, lower risk, lower reward. So these guys are protecting downsides, right? So you kind of have to build these two stories simultaneously. And again, I'm totally agree with Charis that it becomes easier with scale, but at the first stages, it's really tough to attract debt, and you don't want to use equity to purchase your assets because it doesn't make a lot of sense. So you have to raise debt, but you're too small. And first of all, you need to raise equity, and then on top of that, you have to raise debt. So, but I totally agree that it becomes a little bit easier, every step forward. Yeah, but this is an interesting, difference in this business, that you have to build these two stories for equity investors and for debt investors.
And Dmitri, like what came first to you guys? Was it debt or equity? It's I guess it's a vicious circle, but you need to start somewhere, right?
I think most of the companies start with equity, like this.
You need to start not somewhere. You need to start with equity.
Yeah, exactly. Yeah, unless you are maybe Elon Musk that can use his brand name or something. But I guess we don't have such big names in the room, so that's why like most of the companies start with equity, and that's totally fine. As we discussed, and I think what's important, like throughout this early journey, is to systematically go to a stage and prove that your business is sustainable from the two perspectives. So first is that you can scale systematically to show this narrative, because this narrative on the top line growth is important for both sides, so both equity and debt investors. And then second, specifically for early debt investors, is to validate the unit economics, that it's like solid and brings high security, high confidence to inject like venture debt, for example, right? So I think that's very important to validate as early as possible, and then it becomes a more clear playbook, like in the next years, to prove and to top up, let's say, the debt, like in the next years.
Right.
I totally agree.
I second the point on the unit economics, right? As a debt investor, that's definitely something we pay a very close attention to, particularly given what happened in the sector, as Mike said. Sorry, Mike.
Yeah, that is a very good point, because when you build another company, like let's say software business, you can raise quite a lot of equity, and then to sacrifice your unit economics for a while, for a couple of years, let's say, or in B2C business. But here you don't have a chance to sacrifice your unit economics even for a year, because you will not raise debt. Because debt providers, they look at unit economics, it should be profitable. So that's another difference. You should be very disciplined on the unit economics side and not sacrifice it for growth.
But it's a good push for all of us, right? So
exactly. No, that's a blessing, honestly. Keeps us efficient.
Great to hear. We're a blessing, guys. Okay, thanks a lot. Look,
in some way. That's a blessing in a little bit painful way, I'd say.
Yeah, in a bit of a disguise. Okay, Look, I have one final topic or question to discuss, and it's I'll ask each one of you to, I guess, as I said, pull out your crystal ball and give us your best prediction on what the mobility sector will look like in like 5 to 10 years time, so a longer horizon. It'd be very interesting to see how you see this evolving. And while you guys answering, anyone, all the viewers, I think you have an opportunity to ask questions. So after the guys answer this one, we'll be able to take some of your comments as well. So feel free to put them in the chat. And then on my question, Mike, do you want to go first then?
So speaking of the future, well, everybody's saying, well, probably that's not the nearest future, but the most kind of, loud one is autonomous vehicles, I'd say. And I see, speaking specifically about delivery space where we operate, we see this happening in, let's say, 10 years from now, but 10 years is not that much. So we already plan kind of switching from, bikes fleet to autonomous bikes fleet, let's call them like that. So I think that autonomous vehicles are becoming a huge trend now, and fleet operators should consider that as a big shift. It may be small or even not existing now, but it will definitely will grow as just an exponent in several years. So I'd say this is a big trend everybody's talking about. Yeah.
Well, I would add another big trend will be electrification of vehicles in general. For example, in food delivery in Europe, most of the deliveries are done on two-wheelers, so mopeds or bicycles. And when it comes to mopeds, 99.9% of mopeds are still internal combustion engines, so it's gasoline essentially. It's not electric. And there is a very big push on all the sides, regulators, food delivery companies, local city authorities, transportation authorities to move to electric by introducing various regulations. Overall, like total cost of ownership is increasing for gas versus electric, and there will be more innovative and robust solutions when it comes to e-mopeds and other electric vehicle solutions. So I think this will be still quite a big trend that will help to switch over to electric, like in not only in food delivery, but in general when it comes to vehicles and transportation.
Yeah, I agree with that.
I totally agree actually with both views, with both trends. I would add to it just that, and that's more on the car space. I do see that the brands will not be as powerful as they are today. So I do see the options that we're going to have on cars in 5 to 10 years from now will be completely different name-wise from what we have today. And you may see those names today not to be so strong or to have side projects and side brands that they will try to push cars into the people, cars of all sizes and body types. So I think that it's becoming very, very confusing already for people. And I think that's going to continue, especially with all the new manufacturers joining and the electrification, as Mike said, making it a bit simpler to launch new things to people. So I think that confusion is going to persist and it's going to keep going. So I think that at the end of the day, people will not be shopping for a brand, as it used to be the case in the past on the automotive side. I think they will be shopping for experience and flexibility. That's where you need to have more options and better, models like subscription, for example. And I think they will prevail for sure. So, which will result in bank financing going out. So I guess that's where this is going to end up. So ownership, that's bank financing. I think it's going to go out and start fade away as a model, and newer things will be prevailing at that point.
I actually agree with that. So I think exactly that happens already in e-bike and e-moped spaces, what you said. So this diversification of brands and building different models, because I think to build a bike or a moped, it's easier than to build a car. So it already happens. Like almost everybody is building their own. So for example, we build our own bike. It's our own model. It's our own brand, etc. So I think in cars, it's still quite different to build a new brand, a new car, but it will be way easier, and it will, yeah, and it will lead to what you said, that brands will be less valuable, the experience will be more valuable, and there will be more diversification in brands. That's a good point.
Yeah.
Interesting
It's
point
changing.
on
It's
bank
changing.
financing. On bank financing, like becoming like irrelevant. I see where you're leading to, right? Because
it is irrelevant already. I mean, if
rent-
you really think the process, how it works for customers and the risk side of it, I mean, it is the bad way to actually finance something. That's why I believe subscription is better across all elements. But at the end of the day, we pushed out.
But yeah, but exactly. Look, I guess you guys as businesses are taking on that role, that fintech role, if you will. Do you think at some point financial institutions are going to be, well, hold on a second, right? These guys are kind of taking away our business. Do you see a point in time where they actually start offering these schemes, right? They become operators, and that industry changes.
Yeah, the moment
I
they
don't know,
start,
but whether by acquisition or evolution.
yeah, they need to acquire Dmitri and Mike in order to be able to service all those vehicles out there. Otherwise, how can they ever go down the road of subscription or more flexible things? So they need to somehow control the asset, right?
Yeah.
That's what we do. We operate the asset. We provide value to that asset, something that the banks don't see, right? They just finance.
Yeah, we can provide this credit because we control the asset. That's an absolutely important point. Will they want to do that? I don't know. Probably everything becoming more and more vertically integrated. So it may happen. I don't know. I honestly never thought about it in this way.
Yeah, potentially in the future, but again, most of the banks are very risk averse. So I guess some of them may allocate part of their portfolio funds, into such asset-backed financing for like new or growing business models. But I think fundamentally, the like traditional banking industry will not change much. Like I don't expect in the next decade or so. Rather, it will be new.
I guess too slow.
Yeah, too slow. Rather, it will be new. Like organizations or structures that will appear, or double down on such business models and financing such venture assets.
Gotcha, guys. Thanks so much. I must admit, I am a tiny bit disappointed I didn't hear anything about flying cars, which probably means I'll have to wait for a bit more than 10 years. But jokes aside, guys, thanks a lot for your thoughts and your time and your insights into this. I'll ask the audience once again if there are any questions. Feel free to ping them, or if not, I think we'll thank our panelists once again and call it a day for today. So yeah, maybe let's give it a minute